please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, the market's down about 35 odd points or so, but I have to say this, it's essentially behaving a lot better than what it's done over the last so many odd trading sessions. We are not very far away from the day's highest point, either for the Nifty or the Bank Nifty, and we're down about 35 points. Today is futures and options expiry, so brace yourself. With so much what has happened in this particular series, mostly on the downside, I mean, it could become a trending day. It could move either ways. If shorts come to cover, it could actually spike higher. We've had bad news overnight, but that's not prevented the market from recovering from the lows of the day. You're with us here on a fresh new edition of Trading Hour. I'm Prashant Nair. With me today is my colleague Lata Venkatesh. Lata, morning.
Yes, sitting in for the lovely Ekta Batra. The point I wanted to make is, I mean, let's pull out the intraday of the Nifty Bank and the mid-cap as well. For that matter, even the Nifty. After that initial morning low was made, there is almost a trending higher, market. So anyone who bought that dip is actually in the money at several points. I mean, even if you bought it a little later in the dip, you are in the money. 24,800 was seen as an important, I don't know if it's 200-day, but it was a very important support level for the Nifty. And at 24,802, which was the morning low, you saw a bounce back. I'm referring to the Nifty Bank. You saw a bounce from that 24,802, from which the Nifty Bank has not looked back. And this was a point both Mitesh, Ashwini and Sudarshan were making, that Ashwini very emphatically, that yesterday itself the market was showing signs that there is already that crunching fall and all the bad news is probably priced in. And at the moment, you could see a bit of a recovery for some time at least. And that seems to be playing out now with the Nifty Bank up about 65 points from that 24,800 level.
Well, absolutely. I mean, so let's keep our eyes not just on the stock markets, but also with what's been happening with, the yields, for example, or the rupee. I mean, yields are up 20 basis points this week. The rupee is down, 1.5% this week. So, a lot of factors influencing. We'll get into that discussion in a little bit with a special guest who joins us in about 10 minutes. But Sudarshan Sukhani of S2 Analytics was with us. Sudarshan, morning. Thanks very much. Your reading of the screen so far, and whether we get a bit of a move on either side today, expiry day.
Especially Nifty Bank, since you pointed out 24,800 would be the support level. It has proven to be. So now the strategy.
Yes, good morning again. For the Nifty Bank, I think the strategy is to go long at current levels, and that is for the day, for expiry day, and keep your stop just below 24,800. That's some kind of a Lakshman Rekha for technical traders, below which a significant breakdown happens. If that's not happening, that's a stop loss and a long position is justified. Because it is FNO expiry, it is also possible to buy 24,800 calls, which gives you limited risk and potentially large reward. So that's a trade on the long side for the Nifty Bank. There is no trade for the Nifty. Positional trades on the short side should be maintained, but there is nothing new for the day.
Okay, in terms of specific trades, stock trades, Sudarshan, what would you recommend?
Well, we start with the IT pack. We've all been speaking about how the IT pack is outperforming, and that outperformance should continue. So Tata Elxsi is a buy now as we speak. Earlier today morning we talked about Mindtree. I think these IT stocks are coming in our list repeatedly, and that's because their charts are very attractive for buyers. So Tata Elxsi is a buying opportunity. So is United Spirits. United Spirits had a dramatic 25% decline. That decline is probably coming to an end. It's an intraday trade on the long side, and you could also carry positions. So it's available for both trades. And finally, there's a short sell, Dalmia Bharat Cement. I am downbeat on cement in spite of the spikes we have seen in Ambuja, half-day spike in ACC. The trend is down, and Dalmia Bharat is a short sell for the day.
Sudarshan, you gave an unambiguous call on the Nifty Bank. Is there a trading call on individual banks?
There is a trading call on ICICI Bank and Axis Bank on the long side, but I would prefer to go for the Nifty Bank. It's much easier to do so.
Fair enough. All right, Sudarshan, thank you very much for giving us your midday trading strategies. The strategy is to go long on the Nifty Bank. It has proven, at least this morning, that 24,800 is a fairly strong support level, as Sudarshan says, a Lakshman Rekha for the moment. Well, let's get you F&O strategies as well. We have
CA Rudramurthy, BV Research Head, Vachana Investments. Rudramurthy, thanks very much. Good morning. What would you trade right now?
Good morning, Prashant. For pure intraday, even I have a long call on index. In fact, Nifty can attempt this range of 10,385 to 10,400. And similarly, Bank Nifty can make a move towards 24,950 to 25,000. But one has to understand this is just that intraday bounce expected for the expiry. But eventually, I feel in the March series, Nifty has to come down. And I see levels closer to 10,060 on Nifty, as well as in Bank Nifty, levels closer to 24,000 are possible. For this trend to change, Nifty future has to go above 10,435. So till we are below 10,435, after today's initial move which can happen on the upside for expiry factor, March eventually will be weak. Keeping these views on index, I have three specific intraday buy calls for today in the market. The strong stock for me is HDIL. This stock is having a strong base formation at current levels at around 49 rupee 30 paise, 49.40 paise. HDIL can make a move towards 52 rupees, and from these strong zones, the stock for short term can see these levels. For pure intraday, go long on HDIL. Even today, open interest addition is seen on the positive side. Have a target of 52 with stop loss of 49. I have another buy call that is on Jindal Steel. This stock is again making strong supports at 240, 245. For a pure day trade, we can expect a move towards 255 with a stop loss of 244. And Hexaware is my last buy call. Have a target of 355 on Hexaware. And this stock can in fact do good even for medium to long term and outperform the market. Have a stop loss of 350 for the long call on Hexaware.
Okay, very quickly, Rudramurthy, you're not the first person telling us that after perhaps a bit of a jig today for expiry, the markets will be weak in March. What will be the individual stocks that we should be keeping on our radar as the bigger laggards?
Yeah, Lata, in fact, for me, whatever bounce we are seeing is just for a pure day trade. And individually, if I have to short markets, I will again pick up PSU banks only. But one has to understand, wait out for this short covering and this small up move to happen today. And only for positional traders, I will still pick up those PSU banks to short again. Bank Nifty is the more weaker counter. And anyone wants to stay long, please stay long only in IT. So banking is the weakest leg which will underperform the market, and for outperformance on the long side, IT should be the index what one has to hold. Stocks like TCS, Hexaware, Infosys, Mindtree, these are all good stocks on the IT front. And for shorting the Bank Nifty, as well as stock specific, I'll be looking at shorting counters from PSU, where the similar ones like PNB, Union Bank, Allahabad Bank, these are the counters what one has to short. But wait for today's intraday up move in PSU banks and then short only for a positional trade for March series with appropriate risk reward and stop losses.
Rudramurthy, thanks very much for that. Appreciate you joining us. So that's what Rudramurthy would be doing in the market right now. You know, there was essentially Sun Pharma which came up at the bottom of your screen. The stock is seeing a sharp recovery. Sun Pharma's yesterday's low was about 510, 511 rupees. It recovered quite a bit from the day's low yesterday itself, and it's pulling back more now. 540. Remember, the inspection at Halol is underway. It's expected to finish by the end of the week. What's weighed down on the stock is apparently a disclosure that one of the inspectors who's actually conducting the inspection at Halol is kind of strict. And I mean, that is put the fear of God, I guess, in people who want to trade in and out of Sun Pharma. But, you know, very difficult to take a call on what will happen on FDA inspections. But we got that big move down and now a bit of recovery. The big low on Sun was about 430 rupees. So we're still about 100 rupees plus away from that point.
Okay, difficult to call a trend just yet. All that we can say for now is that money is moving quite definitely from probably finance to IT for sure. That's the big positive trade. And next to that is still metals. So, you know, those are the flagship sectors. We have still not seen any such sectoral trend in pharma. Let's take a break on that note. Up next, we discuss the macros, exactly what Prashant referred to. Today, the knock in the stock markets, especially on Wall Street, have come from the bond markets, and the Indian bond yields have also been spiking higher for practically the last 8 weeks. And now people are talking about 8% with some nonchalance. We now discuss macros because they are having such an important impact on the micros. Overnight, we got quite a few cues. GST collections saw a drop in January against expectations that higher consumption will see a buoyancy in tax collections. MPC members, the Indian Monetary Policy Committee members, expressed discomfort over the rising inflation, and the US yields hit a fresh 4-year high after the release of what looks like hawkish statements from the FOMC's minutes. Taimur Beg, Managing Director and Chief Economist of the DBS Group, joins us to give us his perspective on all these issues. Well, first up, Taimur, let's start with the global scenario. 2.93 on the US 10-year and very confident statements on growth. Is the tone looking like 4 hikes from the Fed? And if it is that, how will the markets respond in the days to come?
Thank you, Lata. Good to be on your show after a long time. I would like to cast this discussion in the context of volatility measures. So if you look at bond market volatility from options prices, or if you look at the VIX, looking at the equity market action over the last, say, 4 years, you would notice that around the election of Donald Trump, there was this big pickup in bond market volatility. Expectations were that, there would be tax cuts and fiscally aggressive policies, which would lead to more debt issuance. But that sort of died down over the course of last year. It's back on right now. And it's back on precisely when equity market volatility has picked up too. Now, this rise in VIX and rise in options-based bond market volatility is a relatively rare event. If you look at the last 4 years, one or the other have taken place. They have not really taken place together. So what is this telling us? It's telling us that maybe the equity market went ahead of itself in the valuation side. So there is some volatility around the sell-off and bottom fishing. On the bond market side, I think it's the Trumpflation trade back again. We are now looking at a late cycle in the U.S. when both fiscal is and monetary are perhaps a bit too exceptionally supportive of the economic momentum, which the bond market's view is that inflation will take up anytime soon. So now to go back to your question, does this mean that 4 hikes as opposed to 3? I think the Fed would still rather be at 3. They're actually kind of pleased that the market's pricing of the expected hike is now more or less in line with the dot plots for 2018. Okay. And I think that March likely, June likely, but after that we'll have to see. I personally don't believe that there's a massive, ugly rise of inflation in the pipeline that would justify significantly higher than 3% bond yield. So I think we are probably at the top end of the pricing end of the coming action.
Okay. They say that, and this is a broad question, but a rise in inflation essentially eventually kills bull markets. Are we at that point, I mean, overall, when you look at things, or do you think this is a short-term move and we are not at those levels right now?
Again, so what is the market saying in terms of treasury pricing or the inflation index bond? It's saying that there is a generalized likelihood that inflation will be higher tomorrow than it was yesterday. But when you look at this in the context of the last 5 years, inflation expectations are still exceptionally well anchored, and there isn't any runaway event in the pipeline, whether it is from wages or prices or further fiscal or monetary policy, that might make one to believe that, additional inflation is in the pipeline. Already, given the volatility that we've seen in the markets in the last few weeks, it has taken away one key quick driver of inflation, which is oil. And this is, of course, music to also India's ears, because oil was turning out to be a bit of a spoiler in the first few weeks of the month in January. But now with oil sort of, well-behaved in the low 60s, I think we can live with that not being a source of major inflationary pressure. The key question, both for the market and policymakers, is the following. As labor markets tighten, as wages pick up, would the third peg follow, which is a pickup in prices? I don't think that link is very well established yet. We are in a very interesting phase of technological disruption in our economic history, where prices are not showing the sort of inertia that they used to show in the past because of the Amazon effect. So maybe even if there were wage increases, we may not see concurrent price increases, and therefore maybe inflation is not going to jump as much as we fear, and maybe the central banks don't have to react as aggressively as some of these markets are suggesting.
Okay. Okay, well, there could be an argument that bond yields are jumping because they don't want to buy the huge supply of bonds expected from the Trump administration. But let me keep that dialogue aside. I take your point that you don't see, at the moment at least, the rise in yields to be too sharp, and certainly not sharp enough to impact global equity markets. But let me come to India. Here, it's not just inflation, but a serious aversion to buying bonds that's pushing up yields. Where do you see Indian yields now?
So, Lata, it's been a slog, no doubt about it. I mean, when you talk to foreign investors, they remain favorably predisposed toward India. They're not looking at, again, inflation being a spoiler. And I think, whenever the auction quotas are opened up, we probably will still see real money flow to India's bond market. So I don't think the issue is external interest or external concerns about the macro. It's really a domestic driver story here. Yes. I mean, we're talking about fiscal slippage, we're talking about banking system stress, and perhaps some sort of a fatigue on the flow of fund side as well, which has been very, very buoyant over the past year or so. Now, is there a set of news in the pipeline that could buoy market sentiments? I don't think so. I don't think, between now and March or April, nothing on the fiscal side is going to come out as pleasing to the market. You just alluded to the GST data. This has been my long-standing concern. I used to come to your show 2-3 years ago and used to sound, warnings about GST implementation, and you can see how challenging it is turning out to be. But even beyond that, overall, the trade deficit widening and various possible restrictions on ECBs, I think all of those are casting a shadow on fundraising, external or domestic. As in external currency or domestic currency denominated. And therefore, I think the risk is asymmetric. The chances of yields rising, I think, is much higher than real yields falling, even though we're not particularly bearish on the inflation side.
All right, Taimur, thanks very much for your perspective. Appreciate you joining in with that. There is news at the bottom of the screen, and this is with regards to telecom, PSU telecom companies, and sources are telling us that the government may explore telecom PSUs coming together in some way. There might be memorandum of understandings which could be signed, the four companies which are mentioned are MTNL, BSNL, ITI, and TCIL. Two of them are listed, which is ITI and MTNL, and both are, I think, up. Beg your pardon, 10% on MTNL. ITI is up about 3%, but no details so far. Telecom PSUs to sign MOUs for strategic cooperation is what the news, the flash says at this point.
Difficult to really find some logic into
doing
this.
Away with redundancies, etc. But aimed at what? Not known.
Okay. No, I think for the last 25 years we have not seen MTNL perform. MTNL was a performing stock before a concept called Bharti Airtel came onto the stock markets. And thereafter, once the mobile has become the chief mode of telecommunications in the country, I can't even remember. I did cover MTNL very actively and interviewed the chairman every time the results came in. I think the last of it was 1996. Thereafter, I've never seen the MTNL chairman being interviewed.
Last time I spoke to MTNL, I remember it was 2007 or was it 8?
That's very charitable. No, my point is, a strategic cooperation between several weak companies, is it going to lead anywhere? The technology has run away. MTNL was the first to get 3G broadband, when we were moving from 2G to 3G. But very little came from that company to be able to, build on that first mover advantage. And when 3G was Spectrum was released to others, the game was completely taken away by the private sector. This is, well, I don't know, there could be something in terms of a minor play for the moment, but it is just that. To expect these public sector telecom behemoths to get any life looks extremely unlikely.
Now we got another new player, not so new now.
Now it's one
already hurting the leader, which is Bharti. So environment is extremely competitive, but maybe the government is doing what it can to salvage the situation, bringing all of them together and trying to do something. But we'll get you more.
Shouldn't you sell? Even the real estate value will be so much more than
with the operational
what value
business,
you can get. I don't know why we are sticking with Air India, MTNL, and now the questions are being raised on public sector banks.
Air India, although they are on track to now divest, but
To announce, yes. Yeah. Okay, sorry, that's just our, regret with the telecom PSUs. We'll come back to this story in a bit when the telecom minister will speak. We take a break. We are returning with market technicals. Ashwini Gujral.
The market is, down about a third of 1%, so about 35 points. It was there when we started at 10,360 is where the Nifty is at. Let's pay attention to some exclusive story now. 2017 was a big year for the renewable energy industry. We saw big policy changes like the competitive bidding in the wind sector, record low tariffs, not just in wind but solar as well, and the GST rollout, of course, which impacted all industries. 2018 promises to be one in which the big boys in the renewable energy space come to the public market, stock markets. Nisha is joining in with what their plans really are. Nisha, over to you.
The year 2018 could well be the year of big bang IPOs coming in from the renewable energy space, the largest that India has ever seen. What I gather from sources with direct knowledge is that both Sembcorp, which is a Singapore-based company, has an Indian arm which is likely to list this year, and Renew Power, which is founded by Sumant Sinha and is owned by Goldman Sachs. Now, what I do gather is that Sembcorp is moving fast. They are going to file the DRHP very soon, in a matter of days or maybe even today. So that's what I gather. And they're looking at raising over $500 million, close to about $600 million, with a total valuation expectation of $2.5 billion. As far as Renew Power is concerned, that has been readying up for an IPO for a while now, has got some marquee investors like Japan's JERA, CPPIB also invested into them, and is now looking at a large transaction to beef up its overall portfolio ahead of the IPO filing. So they are likely to announce their Ostro buyout from Actis for $1.7 billion by the end of this financial year, and after that closure, soon after DRHP filing is expected. They are looking at a valuation expectation of over $3.5 billion. But remember that it all depends on the kind of investor response they get, and the valuations can really depend and change as per the market conditions as well as the investor response from the road shows. So both these companies gearing up for big IPOs in this particular year.
Okay, thank you very much for that. Nisha, they well may, but in this roaring one-year rally, among the biggest underperformers have been Inox and Suzlon. So, I don't know whether you're really, if you didn't catch the crest in 2017, coming now perhaps may not be the best of times. But to be fair, it's quite possible that Renew and Sembcorp have better numbers than the listed stocks. Okay, with that, we shift focus to the trading strategies once again. And as our trading experts were telling us, there clearly has been buying at lower levels, and all the indices are a distance from their early morning lows. Ashwini Gujral joins us again. Ashwini, you had taken long positions and advised long positions in the Nifty Bank, even at 24,850 thereabouts. Will you persist with them?
So let me start with what I'm watching. Now all kinds of exporters are moving up, whether it's auto ancillary or pharma. So export seems to be emerging as a big theme, although they are not doing well, but weak rupee is giving that flip. And as far as Bank Nifty is concerned, Asia is recovering. I mean, Hang Seng was down 350, now it's down 250. So that way there are early indications that maybe as the day goes by, people will learn to live with the bond yield, etc. And given that we are totally crunched on Bank Nifty, I would still think more short covering should be on the way. And in case global market also recovers, the Bank Nifty leg may also participate. But for the moment, we should go with exporters. So Motherson, I believe, has bottomed out. And that's a big statement to make, because whenever the stock plunges in this manner, this is a very quality exporter. So it's not like it's going to go out of business. These things happen. When stocks come down, quality stocks, you buy them. I think this is a buy with a stop of 310, target of 332. Even longer term, it's a buy. Tata Chemical is a buy with a stop of 695, target of 725. And Sundaram Fastener is a buy with a stop of 538, target of 560.
That makes two auto ancillaries in the list.
Oh, absolutely. I mean, Motherson was what, 400 rupees? It's now about 316 or so. So it's come off a little bit. Ashwini, this momentum in metal stocks, steel stocks particularly, I mean, is it gone for now? Or do you think it'll come back roaring if the market revives?
See, it's all a story of, how global markets react to this yield news. In case, everybody takes it in their stride and all global markets start to move higher, then I think metals will also move up, because the growth story should take metals higher. This, yield story can create a correction. I don't think it can really change trends. So that way, I think this decline on metals should be used to buy.
Okay.